What's up, guys? Welcome back to another video. Today we're talking about the consumer sentiment survey and how it can be actually a very useful forward-looking economic indicator for traders who are trying to get more into the fundamentals. So without further ado, I'm going to ask you to quickly hit that thumbs up button, subscribe to the channel if you're new. Let's jump into this topic. So if you're newer to fundamentals, this is a topic that oftentimes gets overlooked, this consumer sentiment survey, but it is actually a very important one. In fact, it's one of my personal favorite economic indicators to look at, believe it or not. Sure, it's not your NFP event or your CPI numbers, but this number is very useful in understanding a key component of the economy, the consumer. So first of all, what is the UOM consumer sentiment? First of all, that stands for the University of Michigan, who conducts this survey. And what it does is it basically surveys a whole bunch of consumers and it asks them how they're feeling about the economy. So it's an index based on surveyed consumers, and about 500 people are asked about current economic conditions as well as future economic conditions. And I like to think about this and make it kind of a simplified version. If I think about this off the top of my head, if you asked a bunch of people, hey, are you going to travel this summer? Or, hey, are you going to, get new shoes soon? Just anecdotally, that would tell me a lot about how consumers are feeling about the current economic conditions. If they were responding, yeah, I'm going to go travel, I'm going to do this, I'm going to do that, that would tell you that the economy may be a little bit strong in the eyes of the consumer. Whereas if they were saying, no, we're going to pull back this year, that would tell you that perhaps some contraction is coming. And key to note here is that that is kind of a forward-looking indicator. We're not looking at what's already happened, we're looking at how people are feeling right now. And that is why it is one of my favorite ones, similar to PMI, which, by the way, if you'd like to learn more about PMI, I'll leave in the top right hand of the screen here a link to our video that we did on that topic as well. So what does this actually tell us? Why is this a materially important concept for us to understand? Well, it helps to gauge consumer financial confidence. Again, if you could read the room and see how well people feel about the economy or lack thereof, it can be a very useful indicator for traders and investors to consider. So what you can see here is this is just an example chart, the index of consumer sentiment, and you can see it's going all over the place over time. But what is notably here is that when we had everything happen in 2020, consumer confidence really dropped off a cliff. It happened again in 2022 when we saw kind of a market downturn and the economy was looking a little sketchy with rising interest rates. My point here is that this actually was kind of a lead indicator to what was a really ugly 2022, and now we've seen it rebound a little bit here in recent times. But again, it can be a useful indicator, especially if you plot it against some of your favorite currency crosses or commodities or stock market indices, whatever you trade. It can be very useful to see how it impacts the charts you're watching. So let's step back for a second and talk just how important the consumer actually is. The economy is all about the consumer, whether you're talking about the United States or some other place. A strong, middle class in the United States especially is very important to a strong economy. So having strong consumers equals more economic activity. If you have people with money in their pockets and the ability to get jobs and all that sort of stuff, and they're feeling strong, they're going to go out and spend more money, and they're also going to borrow more money, right? They're going to go buy a house. They're going to go get a loan. They're going to go pay for a vacation. They're going to stimulate the economy because they're doing okay. And that, of course, equates to more good economic activity. When spending is going on, that's good. When everything slows down, that's not so good. So anyways, how does this impact stocks? Let's dive into how this might impact markets that you guys might be trading or watching yourselves. So let's say the consumer sentiment is good, and that would indicate a higher indexed number, and we're seeing, hey, the economy is looking good in the eyes of the consumer, or things are looking a little bit better looking forward. That would actually be a good thing for stocks, because think about it, it's really simple here. If the economy is moving and shaking, companies are going to do better in that environment. They're going to make more profits, and more profits means more earnings, growth, and that earnings growth is going to equate to elevated stock prices, and of course that's going to move the indices as a whole. So that's the idea there. Of course, the opposite would be true as well. If you see consumer sentiment looking worse, people are going to spend less on everything. They're not going to go buy a new pair of Nike shoes, that sort of thing. that would of course be less attractive for stock earnings or company earnings. And of course the stock market in that case could see some deterioration. What about the US dollar? So a lot of currency traders might be wondering, well, how does this impact the US dollar? Well, it's pretty straightforward here as well. If you're seeing the consumer confidence kind of rise, consumer sentiment index elevating, right, increasing, that would be stronger for the dollar, shows a stronger US economy. Remember, a strong economy is moving and shaking. And so if we have that, the dollar is going to look a little bit more attractive relative to some of its peers, especially if other places in the world are not seeing that same level of kind of moving and shaking growth. Of course, the opposite would be true. A weakening consumer and a weakening consumer sentiment is usually tied to a weakening dollar as well. And what about gold? Because a lot of traders love to watch gold futures. They trade gold, whatever, CFDs, whatever you trade. The opposite, of course, a strengthening dollar, right, would impact gold negatively. And usually economic strength is actually not that great for gold, because economic strength takes away one of the key components to gold bullishness, which is a little bit of concern, a little bit of fear and uncertainty. So if the economy is looking good and people are feeling good, that's not going to be a super attractive environment for gold. I do also want to take a quick moment to let you know that whether you trade gold, whether you're looking to trade futures, currencies, stocks, whatever you're looking to trade, if you're looking for a brokerage or you'd be willing to switch to one, I've got something cool for you. Down below in the description, there are some sign-up perks for some referred brokers that we've got attached to the channel. All of these have special sign-up perks. You can get things like free shares or free access to some of our softwares that we build and sell here at A1 Trading, my company. So if any of that sounds interesting, check out some of the offers that are available down below in the description. They should be there for you to check out, especially, like I said, if you're looking for a new broker, why not get something free, something special perked just for watching my video. Of course, these are referral links, and if you choose to use them, you'll be helping out my channel, and I very greatly appreciate that. Now, a lot of you guys are looking to get more into fundamentals, and don't worry, this is not a sales pitch. I've got more free value for you. In the top right hand of the screen right now, you'll see a link to our full playlist of fundamental analysis tips, tricks, and videos that we've done on different topics. So check that out there. That should help you out if you're looking to improve. Thank you guys for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.